An African Union-backed panel has urged Moody's Investor Service to review an appeal by the Ghanaian government against the rating company's downgrade of the West African nation's debt. Ghana's finance ministry had criticized Moody's decision to lower its rating further into junk status and said the company used incomplete data. Moody's cut its assessment of the nation's long-term debt one step back to CAA1 from B3 on February 4. Taking such a major rating decision that threatens debt sustainability of the country should be treated with seriousness, the African peer review mechanism said in a statement on its website, adding that Moody's have failed to do that. Now, Moody's didn't respond to an emailed request for comment on the Ghanaian government's criticism, and that forms part of today's discussion. Even as we consider the topic, African countries push back against ratings agencies. This is Business Edge. I am Lekan Onabanjo, standing in for Tolulokpe Adelere Balogun. You're welcome. Joining me from Nairobi is Lekan, Satchu, Africa Geo-Economist and macro analyst, is also the CEO of Reach Management. Good morning to you, Lekan, Satchu. Thanks for joining us on Business Edge.
Good morning. Thank you for having me.
Now, in a nutshell, what is the role of the credit rating agencies, and why is it that countries have to depend on these ratings when it comes to borrowing funds or raising funds?
So credit ratings agencies, of which Moody's and S&P and Fitch Ratings are the three best known ratings agencies in the world, provide a service. Basically, they analyze a country's credit worthiness, they score it on a table. AAA is obviously the premium score. Then you go all the way down to junk and below junk. And investors globally use them as a scorecard for analyzing country risk, corporate bonds, and making investment decisions based off the back of the scorecard that these ratings agencies provide. So they provide a global service. They are widely used by practically all market participants. And in many cases, investors will have mandates where they can only invest, according to a certain criteria. And therefore, if there's a ratings change, it can cause either a sell-off in those bonds or additional buy-side demand if it's an upgrade. So they are a key cog of the international markets. And globally, everybody's looking at the scorecard that they provide.
After Ghana's downgrade by multiple credit ratings agencies, its government actually accused them of being biased towards African countries. Is there any claim or is there any validity to these sort of claims?
This is a common refrain from African countries who have misbehaved, misspent, and generally played fast and loose with their finances. And this is Ghana's a classic example. And they always start crying foul, this is an anti-African thing. It is nonsensical. It really is. And it's just a poor excuse. And it's so annoying to hear policymakers rely on this excuse. These ratings agencies are widely accepted. They have analysts who are analyzing the country or the corporate very, very carefully. And whenever you see this pushback against ratings agencies, it's normally a very, very bad sign. And it also speaks to the fact that policymakers who are pushing back probably are popping quaaludes and haven't understood the reality of the situation or pretending to themselves that somehow it's an anti-African thing. It isn't. And I think we should stop these very silly excuses.
Now, Ali Khan, what are the indices when it comes to rating countries? Now, when you look at countries' credit ratings and viabilities, what are those parameters that are actually considered? And does that actually give access to international funds?
Yes. So, I mean, when you're analyzing a country or a corporate, you're looking at the debt load. For countries, this is the debt to GDP ratio that people look at. But, you know, debt to GDP can disguise problems because you can inflate a country's GDP quite easily. So that, you know, I prefer to look at debt service ratios. How much income is the government getting? How much interest is it having to pay of that income? And Ghana is close to 50% of each dollar it collects, it's having to pay into interest or principal payments. Then you look at the lumpiness of repayments. You know, when are the big repayments due? Had they got money in the bank to make a payment of $1 billion or $2 billion to redeem a bond, particularly if they don't have access to the international markets in order to roll over their debt? This is a challenge, for example, Sri Lanka is facing right now. So there are a bunch of things you're looking at, and you're taking a calculation based on, you know, a bunch of inputs, and then from that you're making a judgment call on the rating. It's quite a scientific, empirical process. It isn't something where some guy wakes up and says, I don't like the Ghanaians, I don't like the president of Ghana, I'm going to downgrade them today. It's done on a continuous basis, and you know, the analysis is relied on heavily by international investors, local investors. Basically, anyone participating in the bond market is going to be buying or selling on the basis of ratings. Of course, sometimes people will say to themselves, I think this rating is probably too harsh. Ghana has got all this additional resource which is going to be utilized over the next few years, and therefore I think it's a value proposition. But that is a different bet to what the ratings agency is measuring.
Now, you're saying that international agencies actually rely on these credit ratings from these credit rating agencies. In a way, you're saying that what they're pushing out is credible enough. But then Ghana came out to say that when you look at United States debt to GDP ratio, it's said to be 130%, and it had, despite that, it had the highest rating possible, which is AAA. Now, you can also put Japan in the mix. Now, what is the rationale behind this, some sort of discrepancy that we're having between African countries and some other foreign countries? And are there any benefits, so to speak? Can we actually validate or rely on these statistics when you compare regions to regions?
So this is quite an interesting thing. I mean, here in Kenya, the same thing comes out. Look at Japan's debt to GDP is 230%. And therefore we are more creditworthy than Japan. I mean, really, if your policymaker is coming up with that, you've got to get rid of them because they don't know what they're talking about. Let's start with the dollar. The dollar is the most tradable currency in the world. It's 63% of all transactions are done in dollars. The US has an enormous privilege. It has this dollar privilege. It's the fact that they can print dollars and there's a huge demand for it. Now, if you were a Ghanaian central banker and you started printing Ghanaian cedis, I can guarantee you the currency would collapse within 24 hours. So you're comparing apples and pears. Then you have to look at the interest that they are paying on their debt. Today, US interest rates are, close to zero. The 10-year yield is around 2%. If you look at the Ghanaian 10-year yield, it is in double digits. I think it's as high as 20%. So you're looking at completely different numbers. And that's why I said at the beginning, the debt to GDP ratio does not tell you the whole story. It tells you part of the story. In Japan, you have an enormous savings culture. So the government might be indebted to this huge ratio, but the country itself could wipe out all that debt in a second because of the huge savings that are sitting within the system. It's an old society, they've all got savings. So when you look at that Japanese scenario, it's totally different. So what I would say is if you hear this excuse coming out of an African policymaker, get rid of them. They're not good enough. They don't know what they're talking about. And it's very worrying that they keep bringing this up.
All right, Lekan, you get to stay with us a bit. I will be back with you just in a while. Now, the Ghanaian Finance Ministry, while making its appeal, actually cited the omission of the 2022 upfront fiscal adjustments, inaccurate balance of payment statistics, as well as the appointment of a new primary credit analyst as key information Moody's should have considered before publishing its ratings and making its forecasts. Now, is Moody's assessment fair, or is Ghana raising dusts where there are none? We get to find out more on this after the break. Do stay with us. It's Business Edge. Still with me on Business Edge is Lekan, Satchu, Africa Geo-Economist and macro analyst, and also the CEO, Reach Management. Well, our discussion has been about Moody's credit ratings on Ghana and how that affects other African countries. So let's go back to Lekan and understand the issue of credit rating, which is a catch-22 situation for most African and low-income countries. Now, the issue is when they have bad rating, they're not able to raise funds. And when they can't raise funds, it means they would have a negative economy. That's basically the implication. But then people are wondering, economists are also wondering, isn't this an unfair and deliberate holding back of these countries to access funds to grow the economy?
So I think I don't think it's a negative holding back. It's just telling people you've got to run your economy in an orderly manner. If you're going to borrow funds, borrow them for investments that make a return, and the ratings agency, when it sees those returns, will upgrade your rating. If you are spending all the income you're earning, if you're spending 50% of your income on interest and you're spending the balance of it on salaries for your government, then you're not going to be rated highly. That's the end of the story. So I think what the ratings agencies do is encourage a better policy making. And then when you get bad policy making is when you get these types of reactions. So, I don't think that they are, I think you're shooting the messenger. I mean, the ratings agency is just a messenger. They're sent in there, they're analyzing your creditworthiness, and they're reporting those numbers. And if those numbers aren't good, they can't lie about it. And that's the bottom line. And therefore, if the numbers aren't good, you get closed off from the financial markets. But let me give you another example of a positive change. Look at somewhere like Zambia. Under President Lungu, very negative ratings, market access being cut off. You then got President Hichilema, much more sensible, understood how to talk to the markets. The finances still did not look good, but the ratings agencies and investors were able to say to themselves, at least he's now doing the right thing. We can see a sustainable path. And today, although Zambia is rated at junk status, it's able to access the markets because of the forward perspective that people are taking. So I think, the lesson that I would take if I was a Ghanaian president or the policymakers there, get my house in order, start doing it, start doing what is required. And then you will immediately see a better response, not only from the financial markets, but in general from the ratings agencies as well.
Well, you've talked about how significant these credit ratings are and how near accurate they are also. But then let me take you up on this quickly. Now, the three biggest agencies, that is the Moody's, Fitch, and Standard & Poor, have all been fined in the U.S. For anti-competitive practices. That's according to reports. Now, the question is, don't you think there is a need for a room for better transparency when it comes to operations as it regards African countries and the ratings being pushed out?
So I think, the argument has been, and the Chinese make this argument a lot, is that, these ratings agencies don't understand Chinese credit. And I suppose we're making the same argument saying, you don't understand Africa and somehow you're treating us poorly because you're not based on the continent. Look, there have been issues with ratings agencies, like there have been issues with banks, and that's a whole different story that we can go into. But it's a wormhole we won't come out of for another half an hour. Of course, there's been bad behavior as well. But I think overall, if you think that there is an inherent bias, and therefore you're now going to create, for example, an Africans ratings agency, which is going to rate all African countries miraculously at a much higher rate, it's going to have zero credibility. So this is not something which you can finesse or engineer yourself out of. The fundamental original sin is that the Ghanaian government has mismanaged the economy. It has spent money it didn't have. It borrowed more money and spent that as well. It did not make good investments. And now the chickens have come home to roost. And now they're putting their hands up in the air and pointing at ratings agencies. Good for them. You can keep that up for another few months, but then what's going to happen? So I think what we got to take away from all of this is that ratings agencies will reward good behavior, will reward good economic policy making, and will punish bad policy making, populism, and overspending. And at the moment, okay, we came into this crisis pre-COVID heavily borrowed as Africa. We ended up borrowing even more. But really, we got to look at our politicians and say, did you spend the money you borrowed wisely? And in most cases, they didn't, and therefore they're being punished for that. And therefore, we should be asking ourselves as Africans, how do we improve the situation instead of complaining about ratings agencies or the West or imperial powers from 100 years ago? We got to get realistic ourselves. And I think this type of response that we're getting out of Ghana is typical of the responses we get out of our politicians who refuse to take responsibility for their misbehavior.
All right, now to wrap this up, Lekan, I'd like to know, let's make it a bit fair. Is it possible, instead of complaining, as you have said, is it possible for us to have a different kind of ratings, credit ratings, for African countries instead of using the same parameters as we use for high-income country earners?
So I think quite often there are you can argue that there are differences. So for example, in a very small economy, let's take Mozambique for example. A pretty small economy, and suddenly you're discovering gas. So this is going to be as transformative as the gas find was for Qatar. So you can say to yourself right now that maybe they're being rated at a C or junk status, but you can say to yourself, look, in a few years' time, they're going to be, if they manage it correctly, a single A, double A credit. So there are instances where I think low-income countries, because of the low base effect and the transformative effect of a big fine, can be missed in terms of the real ratings of that country being properly signaled and managed. But can we somehow escape what is a standard that is applied whether you are an African country or a Western country or a corporate, an Apple or a Dangote? Is it a different science that has to be applied to this? Absolutely not. It's the same science over and over again. Nothing has changed for hundreds of years, and nothing will ever change. It is, you've got a certain size of economy. It's like, think of it as a household, right? You earn $1,000 a month. Your next door neighbor earns $1,000 a month. You are spending $2,000 a month on going out drinking every weekend, having a good time, etc. The other chap is being wise, saving $500, investing that $500, getting a return every year from that $500. It's as simple as that. who are you going to lend money to? You're going to lend money to the guy who's saving $500 every month. It's no different. Now, the difference here is we are these small countries, but let's say we want to make an investment. So we go and borrow $10,000. We open a shop. The shop does well. Alternatively, we borrow $10,000 and we consume it. And therefore, we're just compounding our problem. So I think it's as simple as that. Mrs. Thatcher used to speak about it a lot, the British Prime Minister. It's like running a shop at the end of the day, except on a much bigger scale. And I think, we as citizens have got to now really take responsibility and ask our politicians the difficult questions, because otherwise we're going to be in a perennial Groundhog Day. We have a couple of good years, we overborrow, we misspend, we hit an election, we spend another billion, and bang, we're in big trouble all over again.
So basically what you're saying is that African countries should stop living in denial, embrace the reports, and make a change.
That's what I'm saying.
Thank you so much, Lekan Satchu, for joining us on Business Edge. Really appreciate your presence. Well, credit rating agencies carry out professional evaluation on debt issues with the aim of determining their investment qualities. This is not to say, though, that there are no occasional errors, as some of them have been sanctioned in the past for not ensuring due diligence. But then, maybe this is a wake-up call to African countries who are usually at the receiving end to up the ante even more to change the narratives and make statistical efforts irrefutable. And that's it on this part of Business Edge. We'll go on a break, and when we return, it will be time for NC4 to watch. Do stay with us. And on NC4 to watch, let's tell you that Kenya Airways expects a 20% rise in revenue this year, according to its chief executive, as it battles to end losses in its passenger business and recover from the effects of the COVID-19 pandemic. The airline, in which the government has a 48.9% stake, saw revenue plunge by half at the height of the pandemic in 2020, as carriers around the world were forced to ground their planes. Now, Egypt's Petroleum Minister Tarek El Molla has said that 3 companies were awarded for bunkering services licenses in following a tender. The companies are Coral Energy, Minerva Bunkering and Peninsula, for 2 licenses on the Red Sea and 2 on the Mediterranean Sea. And elsewhere, oil prices eased on Tuesday as investors scooped up profits from the previous day's rally to 7-year highs, and as global stock markets slumped, although lingering concerns that Russia might invade Ukraine and disrupt energy supplies limited losses. Brent crude futures were at $96.04 a barrel by 0540 GMT, down 44 cents or 0.5% after rising $2.04 on Monday. U.S. West Texas Intermediate crude dropped 52 cents or 0.5% to $94.97 a barrel after gaining $2.36 the previous day. And finally, we tell you that South Africa's government is considering taking over part or all of Eskom's 392 billion rand debt as it seeks to restructure the cash-strapped power utilities loan obligations, according to the International Monetary Fund. Eskom's financial position is of particular concern and requires a decision on how to address its unsustainable debt levels, the Washington-based lender said in a statement published on its website following an online meeting between its staff and South African officials. And that's it on today's edition of Business Edge. Don't forget that you can join us via our social media platforms, that is at New Central TV. You can also go to our website, www.newcentral.africa, for more conversations. And you can also download our mobile app on App Store and Play Store. Until next time, I am Lekan Onabanjo.